Welcome back to economics class. We're going to begin with Roman numeral 3, the market and the economy. The last section talking about the stock market in this chapter. Both the corporation and the investor hope to benefit from the sale of stock, obviously. No reason to be involved in an exchange if the buyer and seller isn't expecting to make a profit. The corporation looks for needed capital to improve and increase its productivity and profitability, and the investor seeks to increase his income. A couple terms before we get started. Based upon what I've been seeing with the stock markets the last, couple weeks now, and if you really want to go back as far as 4 to 8 years, we can see that there are some definite trends on how the stock market operates. These two definitions probably will help explain what we can call them. The first one is called a bull market. Actually, I'm going to put up both definitions or both terms right now as you can see this illustration. But first of all, a bull market is one in which the market is rising. A bull market is one in which the market is rising or improving or increasing. And a bear market is one in which the market is falling. On page 154 of your books, it gives you some information about this. I'll just read it out loud to you. The bull and bear are symbols economists use to describe stock market movements. When the market is rising, investors are buying stock. Economists refer to such increases as a bull market. The bear market is the opposite. The market is falling and investors are selling off shares. I like this illustration because just like you think with a real bull, if it's about to attack, it always swipes up when attacking. And a bear, when it's attacking, always swipes down. So bull market, the economy is going up. Bear market, when the economy is going down. Letter A, the importance of the stock market. Number one, it provides a venue for companies to sell stocks and raise money. This allows for a company to be able to perform projects that a single owner or partners could not afford. The fact of the matter is, when people are allowed to buy stocks, it allows more people to include their money into the company, much more so than an individual owner or a small group of partners could do. Further growth leads to a higher standard of living for everyone in the economy. Number two, it provides opportunities to invest and earn money. Provides opportunities to invest and earn money. A couple more terms that are worth noting. The first one is mutual funds. Definition of a mutual fund is mutual funds are privately managed stock portfolios. Privately managed stock portfolios. The fact of the matter is, mutual funds, a large number of Americans have gotten into it. It wasn't as big of a deal in the 80s and 90s, but by 2000 and definitely today, many people have mutual funds. It's estimated that over 50 million Americans have mutual funds. Oh, I'm one of them, by the way, mutual funds. They're kind of a good balance between people who think, savings accounts are the only way, sure, or those who are afraid to risk it just simply buying and selling specific stocks. Mutual funds is kind of a middle ground between the two. Probably too simple of an idea, but it works for me. The definition of a stock portfolio, since that was part of the definition of mutual funds, it's worth defining here. It is a collection of stocks from different individual corporations. It is a collection of stocks from different individual corporations. The idea is, instead of putting all of your money into one stock, like Apple, Walmart, you name the item, you name the company, you could decide to put it, instead of risking everything in that one company. If it does well, great, you make money, but if it fails, you lose everything you invested. Mutual funds and stock portfolios, the idea where it will take that money and split it up into different stock companies. That way, if one company does poorly, but another company does well, then you still balance yourself out. You don't see the huge rise in profits, but you also don't see the huge dips in profits. It's a better view of how, if the economy is going well, you will do well. If the economy is doing poorly, you'll do poorly, but it won't be that terrible. Usually the best suggestion is to ride out the wind, ride out the storm, and wait for the economy to rebound. Anyways, one thing about mutual fund stock portfolios that are worth noting: it has become an important part of retirement planning for many Americans. If you have mutual fund stock portfolios, you're able to invest for retirements. Many 401s are definitely involved with helping out with the stock market, and it helps you, better prepare for retirement plans. Number 3. Stock market indices provide valuable information to business leaders, economic analysts, and government policymakers for their jobs. The various market indices like the DJIA or the S&P 500 help investors see trends and be better able to predict the risks and returns of various investment options. In short, the stock market provides the information to let people know the overall health of the nation's economy and what intervention, if any, may be necessary. If you could turn in your books, please, page 155. Please read the box concerning the stock market and the Christian. It's worth noting for you students that this will be the topic of your test's essay. So please read it. Jot down any notes that you see from it that you think are very essayable, and be ready to see that on the upcoming test. All right. Big letter B, past problems and present safeguards. The 1920s was a decade of prosperity. People sought to become richer, and many used the stock market to do so. People bought stocks, and as stocks rose, they got richer. There's a reason why they call this the Roaring Twenties. But as we all know, the party didn't last forever. In 1929, the great stock market crash occurred. What caused it? And how can we prevent it from happening again? Those are some important questions that need to be answered. Has the government done enough to prevent something like this from happening again? Because obviously it will affect the next decade in American history. We can't go into too great a detail about this. Maybe refer to my U.S. history class as we get to that material. But it is worth noting the events that led to it. So, 1929, the great stock market crash occurred. One cause for the stock market crash was the concept of speculation. Definition of speculation is buying and selling stock for the purpose of taking advantage of short-term price changes to make money. In your textbooks, refer to page 157. Read the, I guess we could say today humorous, though definitely at that time it wasn't, the humorous, real historical illustration of how tulips made and destroyed a country's economy. It's called tulip mania. Please read that box for yourselves. See, the problem with speculation arises when more and more people speculate in the stock market. As they do so, the value of the stock continues to go up. They rise not because the value of the company that they represent is increasing, but simply because investors expect the price to rise. This results in something called a speculative bubble. A speculative bubble, here's the definition for you, is where the stock prices for an industry or an entire market rise simply due to consumer expectations and eventually exceed the actual value of the corporation. Well, as long as the bubble continues to grow, investors continue to make money. Everyone's happy. But when stock traders realize that the value of the stocks exceeds the real value of the corporations, they begin selling shares in large quantities. A very notable fact is eventually the bubble bursts. Every bubble bursts when investors sell their stocks, causing prices to fall, and then other investors lose their money. As the economy slowed in 1928 and 1929, it became more risky to speculate on the stock market. And over the period of a week, culminating on Tuesday, October 29th, 1929, the great stock market crash occurred. Shareholders, both large and small, lost most of their investments, and in some cases, they lost everything. Well, the question needs to be asked, could a similar situation happen today? The answer? Maybe. The government has implemented some safeguards to make a recurrence less likely. So we have that to think about. Let's talk about some of these safeguards that the government has created. 1934, if I were you, I would probably put this parallel to 1929 as you write 1934. We have what's called the Securities and Exchange Commission, otherwise known as the SEC. Please remember what SEC stands for and also know what it does. First thing, definition if you need one, it was created as a result of the Great Depression. So what does it do? Number one, to require companies to fully disclose their financial status so that potential investors could make informed investment decisions. In the 1920s, corporations had lied or hidden information about the health of their company. They claimed to be sound, which led investors to buy their stocks. Had they known the truth, they probably wouldn't have bought their stocks. Now, corporations are required to report on their financial status so investors could know where they stand. Number two, to regulate the activities of stock exchanges and brokers in the best interest of the investors. In the 1920s, stock exchanges and stockbrokers who had financial interest in additional investments encouraged their clients to purchase stocks when such purchases may not have been in their clients' best interest. This isn't in the notes, but a very good example again of how the Securities and Exchange Commission has sought to prevent another Great Depression crash from occurring is that, as we've seen on the news lately, they literally stop the stock exchanges from operating if the stocks fall a certain percent over the course of that day. It pauses, and they're able to prevent it from happening. Please read on page 157, the last paragraph, into page 158, and that'll give you more, that'll help conclude the chapter material. Thank you for paying attention. This is the end of the Chapter 8 notes. For those of you students, recognize that you will be taking the Chapter 8 Define quiz next week, as well as doing page 97 and through 99 in the activities book. Thank you. Have a nice day.